All right. Hi, everyone. Welcome to the Timing Research Crowd Forecast News for October 7th, 2024. We are recording this at 1 p.m. Eastern Time, and this is episode number 450. So today we're going to take a look at some of the overall markets and some specific stocks and talk about what we think is going to happen for the week. So just to start out here, I am showing my screen, and I'm showing SeasonX. It's this tool that I've been playing around with for the last couple of years, and it's has a really interesting way of displaying seasonality data on a lot of different markets, basically. So this is S&P 500, the historical performance for this week for the last 25 years. So it's let's see. So the winning trades, that means the number of times it was up during this period. So just October 7th through October 11th for the last 25 years. And you can visualize that really well. But the interesting thing is that we're right at a historical bottoming for the markets. And historically, this starts a big uptrend for the market. But as we know, if we'll switch over to the charts, we've already had a pretty good uptrend for the last year, really. So with the exception of a couple blips, and so it'll be interesting to see where the markets go from here. So today I have Norman Hallett and the option professor here with me, and I'm going to go ahead and turn it over to Jim, who's going to moderate the option professor.
Okay. Sounds great, David. Thank you very much. And it's nice to see the seasons are changing, as anybody back east will be able to attest to. Today, we're going to go over these markets because the winds of change have been blowing. What do I mean? What I mean is that China stimulated. So you got a whole new ball game there. You've got China 40% of oil demand. So obviously they're stimulating. There's a spec that they're going to be using more. And of course, wars probably don't help deliveries. So you got an oil deal going. And then interest rates, everyone's jumping into these bonds thinking they're into something sure, right? And now we have yields rising, and a guy named Stanley Druckenmiller saying, I'm shorting those things and I wish I was short more. And this guy's a pretty sharp investor. So we got, and then of course the dollar is now rising. So that's another little wind of change. And some people think tech topped out in June or July, because if you notice, there's not been any new highs since June or July, and the other stocks, value and dividends, have really picked up. So there's a lot of changes coming on here. And of course, we got news coming up. So let's talk about the markets here and see if we can make any sense out of it. Norm, we're going to start out with the S&P 500. It's off a little bit today, but everyone would have to admit it's certainly been in a nice uptrend. So what's your thoughts on that S&P right now?
Yeah, I think that anybody shorting this market is, I mean, listen, this is proof that you go with the trend.
I thought you were going to say if you're shorting this market, that's proof that cousins marry.
I just wrote a whole piece on the importance of of putting the odds on your side, and I was talking a lot in that piece about when somebody when you put on a trade and it's not working out for you, that probably you should have a time limit on how much you're willing to sit there and wait till something happens in your favor, as opposed because the further you get away from the reason you got in, the less that reason has an effect on the current price.
Yeah.
And so and one of the other rules that put one of the other aspects that put the odds on your side is going with the trend. New traders are always looking for everything from the market, and they tend to look for tops and bottoms. And I can't say that I don't, but I do in a very cautious way, and only when certain conditions are around. But the idea here is you're looking at a chart that's is likely to continue to go higher. What am I looking at? That's the 200 and the 50 that are relatively both pretty flat, as in their in fact the distance between the 50 and the 200 really continues to show a consistency that
that's pretty stable differential, huh?
Yeah, I think so. And I mean, there are
What does that tell you, though, Norm?
well, it tells me that you need to wait for a pullback to somewhere around the 50. To me, if I wasn't in it already and I was just trading the index,
Yeah.
As you see back in April, we had a break that rolled right back above the 50, and that's the kind of action that I would be looking for to get in if I wasn't in. I mean, because right here you may have a little bit of a resistance, but what a friend of mine used to say, you have a feeling about something. He used to say, lay down and let the feeling pass over.
Yeah.
Because what do I think? I think we're likely to continue higher this, and from my, and you may be able to help me on this from a stock index standpoint. Does war generally is good for stocks? Am I correct?
Well, war is generally good for an economy because obviously they print a lot of money to support it. Right now, though, I got a question for you. What would your buddy SEMA have to say about that RSI? Because to me, it looks like there's been a divergence here, and it looks like the probabilities, it looks like it's run out of steam a little bit. And the possibility of going back to that 50-day average is rising by the minute. And the VIX is above 20. I'm an option guy. So when the VIX is above 20, that's when investors are a little, they more likely go on a buyer's boycott because the market's just getting a little too bouncy for them. So a buyer's boycott and a relative strength that looks like it's lost its legs, that could be enough to see if we get a move back down to the blue line at least, huh?
Well, I was actually looking at the RSI today, and I'm not, back in right before in late August, early September, where it had its first divergence, where you had a high in price, and that led to a modest decline. The more current late September RSI, right below the 70 level, looks like about 66, 67. That actually took out that looks more normal.
Right.
So I'm not sure. And I'll tell you one other thing that I think people who deal with the RSI, and you do a lot, so you may be able to confirm this, and maybe I'm crazy, more of an observation than a test. When it hangs around that 60 area, when the RSI hangs around the 60 area in an uptrend, that usually precludes another movement higher, as opposed to looking for it to get to 70 and or higher and then calling it overbought.
Yeah.
This 60 level is about the strongest you can see from an RXI as far as rooting for a continuation. So.
Hey, David, can we put the prices on the side of the chart? Because those percentages I don't find
helpful.
clear.
Oh, yeah. I fixed that earlier and then I had to reset it. Okay.
All right, now we know reality. Now we know the price. Okay. So yeah, Norm, just jetting in there, you're 100% correct. That RSI around, and it's all neighborhoods. It's not an exact science. Don't squeeze the quarter until it screams. The ballpark area is around 60. So if you're in the 60s, it could be a top, because if it can't get through the 60s, it's not going into the 70s or 80s, which means you're not going to get the acceleration phase. And if you're not going to get the acceleration phase, somebody's going to sell because they're going to assume this is as far as the car can go. So you're 100%, this 60 neighborhood, plus or minus whatever, this is the neighborhood where it stalls out and it has a nice sharp drop, if in fact they can't get it through the 60s. Because like I say, the acceleration phase is always when it goes into the 70s and 80s. So there's no doubt. And again, if you combine the 60 number with the divergence, with the what do you call it? The momentum slowdown,
right?
And we could be looking at buy the rumor, sell the fact. I mean, this baby's come up very steady. It's like a chugging chance, like ever-ready bunny moving higher. But,
look at that.
Hey, listen, we got report cards coming up. We're going to find out if you guys are bullying us on how good you're doing in school. Meaning we've got earnings, and they're going to come home, and everybody thinks they're going to get A's. And if they come in with C's, believe me, the house is going to go on fire.
Yeah, I mean, look at the RSI between January and April. You had it dancing between 60 and 70, and the price just marched higher. You know, that's the kind of thing that.
Well, again, you always had it above 50. You know,
Yeah,
the big numbers is RSI is 50. If it's above
yeah,
50, your engine is pretty strong. If it's below 50, your engine's pretty weak. And then, of course, when you get into that 60 number, you're either going to go into an acceleration phase or you're a top. So right now, you know, like I say, if this thing blows through 5,800 and the RSI goes to 67, 68, you'll be looking at 6,000, 6,100 on the S&P maybe, right?
yeah, I think so too. And listen, this has been a great market, and there's no reason to. We're still the strongest economy in the world.
Yeah.
And now that we're in a decreasing interest rate phase, slowly but surely, though it may be, nobody would be looking for any more hikes.
You know what? This guy, Julian Robertson, who used to be a big hedge fund guy, he was making a ton of money on Netflix. And he said, listen, bad mouthing Netflix is like bad mouthing Santa Claus. And I think people could say that about the stock market. I mean, if you're bad mouthing the stock market, it's like bad mouthing Santa Claus in the last 14, 16 months.
Right, and I think, of course, the election is going to, you know, there is some whenever there's any kind of worry,
Yeah.
of which there is on. If you're a Republican, you're worried, and if you're a Democrat, you're worried.
Well, I'll tell you something about the stock market, though. You got to admit it has withstood a lot of news. I mean, the wars don't seem to be bothering it. The oil going up hasn't bothered it that much. The uncertainty of the election hasn't bothered it very much. Hurricanes every other week don't bother it very much. But I guess it only doesn't bother it until it does, huh?
Well, climbing the wall of worry, I guess, is what I'm referring to. It's an old expression that I think really holds.
Yeah.
But you can see some volatility. So I think, you know, if you're not in this, you know, use your trading plan to get in. Just don't haphazardly get in. But I think that you've always been a fan, and rightly so, of watching divergence for a clue, and then watching for your trading plan to give you a signal in that direction, which
That's
is
the
kind of what I'm.
combination, Norm, and that when you're teaching that, you're doing people a real service because it is a two-pronged deal. Just because something shows exhaustion does not mean it's a turn. It only becomes a turn when the moving averages roll over. And being a little patient on that, because you know a divergence can be corrected by just one big rally.
Yeah,
But if you have a divergence showing exhaustion and you get the moving average to turn in that direction, now you've got the two fists going, and now you're in a real fight.
yeah, and you know, and I think that you know, a mistake that a lot of new traders make is they anticipate. They see one or two of the three hurdles that you need to jump to make a trade, whatever your trading plan says, and you know, you get in at the second hurdle because you figure, you know, why waste time?
Yeah.
And
And
that's.
sometimes I'll jump in front of it because I'm trading in the options, and we all know the options are a lot cheaper before the volatility speed. So sometimes, you know, if I think it is a high probability, I'll strangle it and buy a cheap, hedge, but get a position going while the premiums are low. Because you know you act like you don't know options, but I know you know them like the back of your hand, and you know that the idea on the buy side is you must buy when the premiums are reasonable and then sell them when the volatility grows. You know what I mean?
Yes, and I used to you know, be in nothing but the option business, and we had an
Yeah.
expression that options are forgiving. You know, it'll forgive you for being a little bit early, and it'll forgive you for being a little bit late, especially if you put in protection. But you know, the fact that you have time as an ally for a while until it becomes your
Yeah, well,
enemy.
like I say, frankly, that's all I do is the strangles because that's, I think, the best way to go. I mean, if I can't buy a strangle at a reasonable price, I'm probably overpaying for the options.
Yeah,
And like I'll give you an example. I mean, Intel, I had a strangle going on Intel before their earnings, and I
mhm.
had a 32 call and a 28 put. Now, the 28 put only cost me $50 to hedge. Now, Intel came out with earnings that dropped the stock to 19. So the $50 option, which I thought I was just putting on as like a band-aid, turned out to be the hero. So you know, it's not a bad way to go to have a hedge going on these things, but you know, you have to be careful on you can't overpay for the options. You got to get in before the news. You got to make sure your expiration is correct. So you know, it's a
Yeah.
simple strategy. but it's like anything else, probably making spaghetti and meatballs is a simple deal, but there's a different taste between Rayo's and mine, right?
Well, yeah, I mean, anybody who's in this business to have it all is not gonna
It's not
is
going to
not
be
gonna
right.
make it. You just get your little piece, and then you're happy
Yeah, yeah.
for the
I
trader who
always
got the
call it
rest of it.
it's a hit and run deal, not a hit and sit.
That's it. That's it.
Yeah. Well,
Um,
let's turn over to, we got the idea on the stocks. Let's turn over to crude oil because that's where the action is,
yeah.
CLZ, and see if anything's going on there. Because I think it's running into some resistance up here, but that could be short-lived.
Well, you've got the tops trend line that you could be drawing here that that gives this particular move a little bit more distance to reach, to test that 80 level.
There you go.
Yeah,
And
there
that
you
is the
go.
neighborhood. That is the neighborhood, Norm.
Yeah.
77 to 80. If it can get through there, then triple digits next year is not off the table.
Yeah, and I grew up in a tough neighborhood. It looks like it'll be a tough neighborhood up there.
You might want to
But,
put your wallet in your front pocket, that kind of thing.
well, it was a mixed neighborhood. I loved it. I didn't know it was when you're in the tough neighborhood and you got good parents, you don't really know what it is. But if it wasn't for stickball,
Yeah.
and handball, you wouldn't have any friends. But this, this is what I would be looking for. I mean, what moving averages are we looking at here this time?
I think you still got the 50 and 200.
The same 205, but you can see how more inconsistent this is in the last chart that we saw.
Yeah.
With the consistent distance between the two. Yeah, listen, there's a lot of room to go higher. There is war that could be expanding. I think you haven't heard the last of tension in Ukraine. We haven't really talked about that, although but I think that's going to be something that's going to be. But look here. If we, in the next few days, the next week, if we reach that 80, 81 level, the 50 is still not going to cross the 200.
That's the problem here is this is a contra rally, but you can see that there was a contra rally back in late 23, and it certainly went on the run to the blue line. So at least going up towards that blue line is not an unrealistic target.
No, it's not an unrealistic target, and I think that looking at this chart today and tomorrow could be critical days on what to do about this, because we are a lot of people watch the 200 and the 50, and
And the other thing, Norm, if you look at it, the first time back in 23 when it ran up and the blue and the yellow were divergent there, it did have a correction back down, and it worked around for a while between the yellow and blue. So
Yeah.
it might not be unrealistic to say this thing may trade between 78 and 72.50 and then go on a further leg, maybe after the first of the year, or maybe, maybe in December.
Okay, so let me, listen, as traders, I always say, listen, it's okay to anticipate where you think the market is going. In fact, I think you probably should. But the next step is to, what if it happens? How am I planning to take advantage of that?
Mm-hmm.
And in an option world, in the option world that you're in, how would you take advantage of what you just said?
Well, first of all, I wouldn't do anything with crude oil futures because obviously the premiums must be off the chart now. So if I'm a buyer of premium, this is not the time to do it. The time to do it was at the double bottom at 67.50. That's how you make money in options on the long side. You buy against the double bottom, and then you get a nice big volatile move, and you cash it in and go to the bar. Now, if I wanted to take advantage of this thing where it is now, and I am looking at the energy shares, because the longer we know that energy is bottomed at 67 and the longer it stays above that, these guys can make a profit at this price. And these stocks are way down. Stocks like Occidental, Devon Energy, Halliburton, Schlumberger, the popular names, and Exxon Mobil, Chevron, and they also have earnings coming up. So, these guys seem to be able to make money as long as we're above $60. And again, getting above 70 or 80 is certainly not going to hurt them. So I am focused on the energy shares because I still think there's been value there. And again, if we're going up to 80 and it's going to stay up there, people are going to start buying. And again, they're not buying tech like they used to. In June or July, value and dividends have been outperforming tech. And tech has not made any new highs since June or July. So, because I look at all these like ratios between the two and all. And so, and I go back, 50 years to see what they look like. And they were all-time highs, really excessive valuations again, the tech over the value. And there was a turn back there. And we can really say that one thing we know is that tech hasn't made any new highs since. And so there has been a switch. So again, energy would be up the value area because these guys pay good dividends and the price to earnings ratios are low. So they're killer made for what the heck's going on.
Now, let me ask you this, because before we get off this chart, because and this is a question that I would ask you when we're done, so I might as well ask you here, because I think there could be interest out there. During the gold rush, the people who made everybody's out there, digging and digging for gold. Most of them failed, but the ones that made a lot of money were the ones, not the ones digging for the gold, but the ones that sold the shovels and the pitchforks and so on.
Mm-hmm.
You just named in the stocks that you just named that would benefit by movements in crude were all oil drilling company, Exxon and others that you've said. Are there any shovel makers out there in this?
Well, I mean the servicers, and that's your Schlumberger and your Halliburtons and your probably Baker Hughes, maybe, those kind of outfits that are servicing. XOP is the symbol for the ETF, or OIH. Mm-hmm. And so basically those are the guys who are kind of supporting the industry.
Right.
The guys that the Exxons, the Chevrons, the Devons, they're out there getting the oil and selling it. ConocoPhillips, Phillips Petroleum, PFX. Overseas, you got your British Petroleum. Up in Canada, you got your Suncor, SU. So yeah, there's a lot of different ways to play it. But again, the premiums on those stocks in many cases haven't jumped that much yet. They're definitely jumping. They're definitely jumping. I mean, the stuff that I talked about a month ago, definitely, it's coming in. But
let's see what Halliburton. Can you put up Halliburton? I want to see.
Yeah, put up Halliburton because, I think
it's a lot like Hallett. It's not like my last name, so.
Yeah, you see, you had the double bottom just like oil. Now you had the rally. Now, it could go up to $34. The calls on some of that stuff might be $1 or $1.50. So, if it's going to go up to 34, there's still juice on the. There's still juice.
Yeah. See, I like these kinds of plays. With the lower end. I think especially for those people that haven't taken advantage of what's going on yet.
Yeah.
But this is a nice looking chart. Although again, same kind of resistance areas.
We can look at the seasonal trends on this too, and see.
Has anybody talked to Jake recently about this?
Yeah, get Jake over there, David.
Yeah, that's a good idea.
Because commodities are turning a bit.
Yeah, it looks like we're close to a seasonal downtrend in crude oil prices. So
so you wouldn't play it from a seasonal, but then the season isn't always war in Iraq or whatever.
Could be the season of the witch.
Yeah.
It could be the season of the witch. Well, like these seasonals are trying to give you some, shall we say, statistical history vibe. It's not an exact science, like nothing.
Yeah, it could jump back up to this trend line and then
there you go.
Drop back down from there because
it could be up to 81, and then all of a sudden, peace breaks out, or they find out that the China deal isn't going to happen as quickly as they thought, and then there you go back in the soup. Because the China deal I viewed as just a huge short covering rally. Norm, they've been shorting that thing for 3 years because they never eased money and credit like everybody else did. They decided to wait till now. Mm-hmm. And so basically, like I say, they had everyone hedged or short, and they all wanted to cover the same day.
Right.
And so your buddy down there, Citadel, or one of his kind of cohorts, the market makers, know what they do if it's an unbalance of volume. They jump the price 35%. They take in all the buy orders and the covers. And if there's no volume behind it, because people don't want to pay this high price now, then it falls under its own weight.
Yeah, and anything China related, in general, you have to move pretty fast on. I find, when I've taken a couple of trips to China, one thing that was obvious is that they can move very quickly. They only have 3 or 4 individuals and basically one who makes all the decisions. I mean, they don't have a
Yeah.
Congress. It's got to go two houses of Congress that it's got to go through, and then it could be vetoed by the president. None of that. They want to build, they want to build infrastructure. They want to build, they want to make any decision about the economy, and they can do it overnight, And so
they don't have to get Marjorie Greene to agree to it.
No, but although if they can consult her on the space lasers and so on that are out there, or maybe they helped them get to the far side of the moon recently.
The biggest business in the entire planet is the U.S. government, and the fact that we have unqualified people in many cases running the show is kind of a scary thing, right?
Well, in the same vein, can we put up the copper? Because that's something that I.
Oh yeah, and I love that Freeport McMoran FCX, but again, it's already had a run.
Yeah.
You can't buy yesterday's newspaper.
You could, but.
Yeah, you could, but or you can't sell yesterday's newspaper.
They don't get the newspapers out as quickly. Before there were all these charts, that you could log into before there were computers doing this.
Yeah.
The internet. On Saturdays we get the big chart, that book of charts we get every Saturday.
Yeah. Did you use that commodity perspective book?
Yeah, I think so, and I think that was the name, and it was literally on onion paper, on tissue, but they had it all on Saturday morning. Friday's closes. I never knew how they got that together so quickly.
Norm, another thing that some of the more experienced guys used to do that I could never figure out how they did it was the point and figure charts.
Oh, yeah.
But they've been around forever, haven't they?
Yeah, and those are the same guys that looked at the tape, which I was
balance, volume.
Remember when you used to go into the lobby and you used to grab the tape anyway? Oh, there's a point. Show off. There's the point and figure chart. Well, I guess it's kind of the predecessor to Candle, in a way.
To me, it looks like tic-tac-toe. I don't know.
And that they always win, right?
I haven't done much with that either, but I know it's there.
It's kind of like astrology. It's been around a long time. There has to be some merit to it.
Do you have a copper chart? What is this, Freeport?
I think this is. I'm trying to find.
FCX is a copper. No, copper would be HGZ, probably high grade HGZ. If you want to see the actual copper price, HGZ.
Yeah, HGZ 24 would be depending. Yeah, that is HG. There you go.
Yeah, it seems.
Yeah, you see, this is a beautiful position. Something's going to happen here. This is the kind of chart I like, because we're right at that precipice here. Not a precipice, but a level that we've seen two shoulders on a head and shoulders top, although it's a bit complicated. Top, head and shoulders. We saw the breakdown. We saw the double bottom form, and now we're back now, and we really never crossed the 50 under the 200. Now we're back in motion, and those two moving averages, and this is something I've been studying intensively the last 3-4 months. When the moving averages are close like this, and they start to, this is where the real acceleration comes. Now, to some degree, it's already happened, to give you that first movement from about 437 to 462, that area there. That could have been anticipated after it broke that.
Just like it was back in 24 when they were kissing like cousins for 6 months.
But this is where I think one could accumulate long positions, looking for a test of that high before. Well, again, we're talking about anticipating and what you do about that anticipation. So you'd have to move down, and we can't do it here to a smaller way. You can because I took on the first one this morning on the long side. Now, I may be wrong, but to me, I got a nice short-term signal to go long, and I took it just on a single copper position, just looking to weigh in. But is that the 5 minute or 15?
15 minute.
Yeah. Now look at the 5. See if you got the 5 there.
Yeah,
there's your 5. But you can see the double bottom that I like. You see the fact that now we're hugging the. Actually, I got in at that breakout. So I'm probably back to even the position. I haven't looked at it. No, that keep going. We're across the the 200. No, next one to the left.
Oh, this
Your
Once
left.
it got above the
Well,
blue line, it was a
yeah, right above. Right, three to the right. One,
Yeah.
2, 3. Just come to the right. 1, 2. Next one. That's it right there.
oh,
So you know, to me, that was enough to start my test, my dabble in here, and because you know,
all right, because this is your loaded gun thing, right?
well, it's loaded gun, but it's not crossing the moving average. This is something, you know, I teach loaded gun, and this is something that's a little bit more advanced that you know, on how to accumulate positions. But you can see all the small bodies that have followed that. And my guess is that we may be moving higher. At least my guess is, I'm a little bit up today. But you know, the idea here is that, you know, I see a reason to look to the north. We're in that area of the RSI that I like, where I like to see somewhere 55, 65, where it can gather some strength for us. And if I lose, it's a very small amount of time. But you know, this is for you know, this is more of a swing trading kind of an approach, as opposed to.
This is the kind of deal you'd stay into for a week if it starts trending.
Yeah, well, you know, again, I don't want to, you know, I look for 2 consecutive closes below these moving averages. You know, actually, I don't, can you draw an 8 in there? 8 bar exponential moving average? Because I think you'll see, and if that's, you know, there.
Add a moving average 8. Yeah.
The 8 and the 9 are you know, are really the holy grail type moving averages.
You can get a color.
Make it pretty.
Yeah.
what color do you want?
Well, and you see, there was the is that the 8 there?
No. Make it purple. Do something different.
Perfecto. There's the load. You can see the loaded gun signal. Did you see it? The loaded gun signal is the one that you see it there, right, David? No, way before that, right there.
This one. Right?
No. That right there, the longest candle, right? Not the
big bar there.
that one right
this
there.
One. This one.
Yeah, where you have a small body like that, followed by a movement through the 8, and look what happened. It gave you a nice. Of course, you know, you got it tried, and this is a, you know, I don't want to, you know, we're not here to give too many lessons, but one of the important things about trading is position sizing. And when you see when you see a long candle, like the green candle that preceded this one four candles ago, when you see that, and then you see a failure, and then you have a trigger against that in that same direction, that is very, very high probability. And
yeah, Norm, it looks like when they dropped it, they were just trying to kick out stops, which is what they like to do. And so basically, once it got back above purple, you already knew the trend was up because purple's pointing up. So you'd be very confident to come back in, because you'd say to yourself, this was a snake job where they ran some stops, and now it's back on the bike again.
Yeah.
And when they do that, that means they're long, the market maker's long down there who filled those. And then basically he's back on the bicycle. And that's why you say it's a very, once you get a snake job and it gets back on the trend, you have a high probability that it's going to go.
Well, you're explaining exactly why it happens. I'm trying to make traders unemotional.
Yeah. But I mean, it's nice to know.
But that's why it actually happens. I mean, that's it. But when I see, you know, a large candle, and again, I'm always looking at that 8 and 9 EMA. It really is a pretty good signal in the long term. But it has that. But now you see all the small bodies in the last 10 candles, and so the market is undecided what it wants to do right now. And again, if we're going to go with the odds, what usually happens is that the trend will continue. There's not enough here to you know, to turn it around yet, and we'll see what happens. But there's a lot of reason to believe that you know, we may be moving a little bit higher today, but we'll see.
Oh, and Michael is with us now too. Michael, are you there?
I am, and I'm so sorry. That's what you call getting distracted and going, oh my God.
Well, I'm gonna have you
No,
jump in.
no.
I'm gonna have you jump in a second, Michael, but because Norm does a lot with the futures, and my studies over the weekend with the relationships between things like growth to value, blah blah blah, also included commodities versus stocks, and
Okay.
that relationship hit an all-time high in Q3, which was higher than the 2020 commodity bottom. So we already saw how copper has turned, and the other parts, and we've seen oil has turned. Now,
Yeah.
Norm, I just want you to put up the soybeans. And do we have a trifecta where the grains are now bottomed and turning?
Here we go. He's going old school on us. All right.
Well, those are the three things in the commodity
Yeah,
index.
well, that's inflation. I mean, that's, let's see.
Now, oh, the soybeans is what is it, Norm?
SB usually. Oh, well, that's sugar.
No, I got it. It's a
ZS,
Z.
that
I'll
one.
tell you what it is. It's ZSX.
Yeah.
ZSX, which is the November.
Well, this should be November showing since it's front month.
ZSX 24. There you go. Soybean
There we
futures. There you go.
Okay.
Well, do you see the loaded gun signal there?
Yes, we do.
Yeah,
Yes, we
there it
do.
is. And so, you know, what happens here should be interesting. We've corrected back to the I guess that's the 8 you still have power
Yeah.
up there, right?
This is actually weekly.
And it's
We're
yeah.
at different
So, you know,
times.
again, you look, and we always look at the longer term charts when we're trading. We look, well, I call it the undertow. But I would be looking for spots to go long in the short term because of the fact that that I've got my signal that I believe looks like it may want to be valid. But you know, interesting. I'm a little disheveled, Michael. I got the storm heading to me. Where are you, Michael?
San Francisco. We got the heat over us.
Oh God,
I can't
I'm in
blame
Nevada.
the
I'm
heat.
in Nevada. It's freaking October, and we're at 100 degrees every day. I mean, what's going on with the
Right.
climate? I don't know.
What's up with that, Jim?
What's up is that hoax that Trump was talking about. You know, the global warming hoax.
Oh, right. There you go.
All right, let's get into this. I want to give you some time here, Michael. There's two markets because we're short of time. Two markets I want you to hit. So I want you to do an analysis with the wave or the Fibonacci's on the stock market S&P and on the price of gold.
Okay. All right.
And maybe we'll throw in crude. Maybe you can show us where the potential Fibonacci's are telling us there. So let's hit those three right now.
So are we going to do SPX?
Yeah, we're going to start SPX, then we're going to go with gold GCZ. And
David,
then
are you like asking me to put up my chart?
CLZ.
Yeah, do you want to share your chart or do you
Yeah,
have
no, put up Michael's stuff. Yeah.
Okay, let me go back over to Zoom here. Share.
This is going to be fascinating because this is where the stuff of Elliott comes in and Fibonacci. And if you can combine, if I combine it with the stuff I already know, sometimes it gives me a better foundation of a decision, you know?
Right. Okay, let me go with that and get this out of the way, put that way up there. Okay, so this is my cash market. I have to take it out to, I probably could put it on my daily chart and I got my count. Now I'm working 2 counts in this. Both have equal part of being enforced right now. One of them is, and I know it's very crowded, so let me get rid of a lot of this. One of them is suggesting that we're still within a minor wave 4 correction, and what we've just finished up here is a B wave. So this would be A of 4, B of 4, and we're going to come all the way back down to below this level. Now, that remains a possibility. The market is not giving me any solid evidence that's like, nope, that's definitely done. Wave 4 is already completed there, and this is 1, this is 2, and this is wave 1 of 3. Now, bring it back down, and we just look at it on an hourly chart. If I'm going to say this is wave 1 of 3, so ignore this, say this is 1, then this is A of 2, B of 2, and we still need to come down. Likely, why did that come up in the NQ? Sorry about that.
Now we're looking at NASDAQ here, right?
Right now we were, but I thought we were looking at here.
No, I was just going to say on NASDAQ, it seems to me like they made a top in June or July, and that the appetite for high PE, hopefully big revenue,
it's just not, it's not
changed.
evident yet. No, you're right. It just truly isn't. If I go back and I just look at that, look at this thing. First of all, it needs to put up the right symbol. That would be like a tragedy.
Yeah, you see
But
that
here
in
again,
July,
the
that
same-
June, July high there, doesn't that seem like an important high? Or are you going back that far, June or July? Go back on the yearly?
This, I can.
Yeah,
just
because
pull it out.
I just wanted to hit these questions that might be helpful to people. So
There's the July high.
I'm operating as if that's the high and it's not going to take it out anytime soon. Now,
Well, then I
dead
tell you,
wrong.
then the next move is to come back down to that low.
There you go. There you go.
That would be it. But I really do feel that couple of things are going on, and you guys are probably, hopefully you're going to agree, we're getting ready to move into, not that I don't think it's going to happen in October, but I think it will happen right away at the beginning of November. We will get that seasonality effect, the seasonal effect, where the market, the equities just kind of go.
Mhm.
And when I start to break it down in some of the individuals, particularly the Mag 7, they're all, the only one that may be off to the races a bit early is NVIDIA. Being up 5 because it came out, somebody recommended it can go to 150. Sure, let's do it today. But again, if they do it, then it's going to go up to maybe 130, get up towards the existing high. And
Well, the
then
high
it's
was already like 146. So what are you going to get, a party hat after if it goes to 150? You know what I mean? That's $5
well,
higher
you
than
get the parting gift, which is you're going to lose money on your position.
Yeah.
But if you're a long-term trader and you're already in, then you're going to be looking to get out. If you're not, and you're just trading to catch the move, then that move may already be underway. I personally don't think so. I think that NVIDIA still has some room to come down and then forge ahead in the seasonal that's going to affect the whole market. So I think the NASDAQ, the Dow, all of them equity-wise will get that year-end effect coming in, but it's not going to really start until November. And so between now and then, I think, yes, this could get in. Now, again, what does not work well within this whole NASDAQ scene is the fact that people are going to look for what's going to cause the market to go down. It's like, okay, we know geopolitical, we got all that, we got it down. We know that there are other things but as far as economic news, well, the only thing that could really smash it now, which would be nothing more than just smashing the hopes, and that would come if employment doesn't continue to be robust, if we get some type of an indication out of there that the market can be, getting a little bit more inflationary versus having it under control. And then again, my other question was always going to be, if we had our 50 basis point reduction, the cut, and they're tooting it around now. You got everybody talking about, whoa, it might get another 20 basis points. It's like, okay, so what are we expecting? That's just we all should jump and buy everything back up again? I think that whole game plan is really on pause. Mm-hmm. And I think in advance of that, there are more important things. It's like, I'm more interested in hearing what Jamie Dimon and the head of B of A and the head of Wells and the head of Goldman, what are they going to say? And we'll start to hear that because Jamie Dimon reports on, what is it, Thursday or Friday?
Mm-hmm. Yeah, on the 11th, they start with that. Biggest risk, don't you think the biggest risk in this NASDAQ is obviously valuations and people's willingness to pay 70? Because there's two things. Microsoft and Amazon will be announcing soon. And there is talk that the cloud computing boom is slowing a little bit. And meaning their the AWS revenue and the Azure revenue might be a little lighter. And then you've got the NVIDIA on November 19th and ARM on October 30th. And it'll be listen, these earnings are going to come out. And if they come out great, then you got no problem. If they come out with anything that sounds like things are slowing down at all on the revenue side,
this thing's cooked. You're right. Yeah,
because this is all revenue. This is a revenue come line bet that's been going on.
So then the reality you start to piece together. It's like there is a reality factor that there's a possibility that they will come out not necessarily bad earnings, no, mediocre with a little bit of a warning.
Yeah. And the guidance is going to be key too, because this quarter's earnings are only supposed to jump like 3 or 4%.
Right.
QT earnings jumped 11%, and the reason everyone's saying 6,000 and more on the S&P is next year's earnings are supposed to jump 18%.
So go to 6,000 now.
Well, I'm saying they're going to obviously buy. If somebody tells you the earnings are going to jump 18% next year, you're not going to wait for them to happen. So the bottom line is there's a lot of anticipatory buying that
Right.
obviously is a buy the rumor. And then if the fact is not as strong, it creates a situation of a possible setup that way.
Yeah,
But it, yeah,
and I agree that that's kind of been the way that things go. But one thing that I wanted to add is so much instead of buying the room or sell the news or anything of that matter, I think that there's new information out, and it's really, I talk about it. It's like if we can just track the capital flows between options, between different classes, between different
yeah,
sectors, and between that and the fact that what results out of that is we're seeing that options are no longer the underlying the derivative, they're the underlying.
yeah, no, that because of all the options going on. Let's hit three
Because of
things
the
quick
option, well,
before we run out of
that
time. Though.
truly,
Let's hit three things before we run out of time.
all
Let's
right.
go to SPX and get an idea of what the waves and the Fibonacci are telling us as far as upside potential, and then what would be a break on the downside.
As far as the SPX goes, this is a updated chart. I'm still running it. There's that possibility that minor wave 4 is not over. Now I have to leave it on because see these two fib levels here, 57.99 and 58.80.
Yeah.
Those are giving the market room to go up, and it finishes what would be declared as an irregular B wave, new high several times, but an irregular B wave. And then what comes next is a very fast, quick slice and dice all the way back down. And to tell you the truth, we'd be looking for the market to come back towards this level, which of course is below the August low and below the April 24 low.
What would start, like, obviously right now the momentum is that we're going to go hit the 58-5900 neighborhood. What would be the trigger that would say, forget about that neighborhood, we're going to go test the lower one? Would it be the break of like 5740 or 5700?
At this level, actually, it's going to be if we start to break 5700. There's major levels of 5700, but the absolute barn burner that would seal the deal. So you got 5700, 5600, 5500, and then if we start to break below 5500, I think it's a very quick trip down to 5000. 5,000 has remained now for the last 6 months or even longer as very, very, very strong support. All the big boys got their long-term support sitting right there. And although we got close to giving it a test back in April, it failed. And you saw it failed in grand scale. That pushed it down and it just zipped right up off of it. So it remains intact. For a long time, JP Morgan had part of their collar was sitting down there. That's now been readjusted and it's been moved up. So I think in terms of like between now and December, we got, what did I tell you? I think I told you before where that put collar was. The put side is,
yeah, you said 59 on the upside and maybe 55
actually the
on the
calls, the actual collar, the calls are sitting at 60.20
okay.
and the puts are at 54.25.
Yeah.
So that
gives you your window then.
It actually does. And so when I was giving upside for what I thought that the market could do, if indeed this is the wave 4 is here and we're in a minor 5 would project up to 6,000. It most certainly would. I've taken them off for right now, but I'm like, well, gee, what happens? But then again, isn't it normal that when JP Morgan puts on a collar, as we get towards that date, which is December, and it just happens to be December 31st, right? That's the last trading day. That's really somebody, they get up and they want to go pressure it.
Yeah,
so I'm like, if it takes us that long to get up to above 6,000, then it's going to be part of the year-end rally, which I still believe can happen. And seasonally, it's showing on every seasonal chart I have.
Yeah, if we get above 58.20 on the S&P,
I think that I'm going to switch over.
It'll start accelerating to those higher numbers, no doubt.
I agree.
I agree. Let's go over to gold here because, like I say, we're pressed for time. How about gold? gold hit their high point and it's kind of farting around just like stocks are.
Kind of, but I'm going to tell you, I just think I think gold will likely hold above 26, maybe dip quickly underneath it. There's your support level 25.92. This is basis the December contract.
Right.
So then I think we rally back up.
Yeah.
There's my target, 27.25, and
Right.
that finishes this third wave, right? The color coordinated, and we come back down again, and then we go back up, and we're looking to finish this one, and guess where that guy is? Right there.
Yeah. I got
29, and I think
25.75 as
that
a key
actually
number, so
can
that's
be
good.
by year end.
Yeah.
Where does
And
that
what
put
is the
silver?
time?
Where does that put silver, Mike?
It actually puts silver up about it.
Silver's got a great relationship with the price of
$40,
gold, very cheap.
42.
Actually, a little bit
37.
higher. Yeah, 42 to
42.
44, and with an upside of 47.
Yeah,
Nice.
I've done fairly well trading off the silver gold ratio lately.
Right.
Yeah, well, they took them a little while to do that catch up, but they did.
Yeah.
Well, they've improved it, let's say. They've improved it.
Yeah.
So, but here, we're in that fifth wave, and in the precious metals, particularly silver and gold, that fifth wave is usually the largest and the longest and the strongest. Let me just broaden this out a little bit
I can't wait.
so you can see these numbers. I mean, come on. I got to go all the way out, believe it or not. Let me see my 5-year. I know we got to finish, and I'm sorry for my tardiness. But anyway, silver looks good, gold looks good,
Yeah.
and I think that it just.
All right. How about 1 minute on the crude oil? What is your Fibonacci's saying where we could go up if you're?
I actually don't do well. Actually, I have some, Jim. Let me see where I got it. Well, I'd have to rearrange
Look at that,
it.
Norm. 81, 61%.
Yeah, but wait a minute. Hold on. Let me just. I gotta edit, activate. That's what I want to do. And I put it
there you go. 81, 79.
79.
Yeah.
And that's just taking it from that high. But don't forget that it's like if something really gets stupid in the Middle East.
Yeah, no, anything can happen.
They're talking about $100 crude. And I'm like,
all right, well, that can happen. Let's wrap it up here, Norm. Explain how you're going to help people with the mental side of the trading and other things that you can help them with, and then how to contact you.
Yeah, I think I think just write me directly at admin, short for administration, at thedisciplinedtrader.com, and just ask me any question you want, and I'll respond. So admin at thedisciplinedtrader.com. I just think right now there's going to be a lot of emotion in the market. I think that that this is a time to kind of not to ask yourself to change, but to assess yourself on your weaknesses and your strengths, and adjust your trading plan to fit you, as opposed to and still test out positively, if you follow the plan. But the idea is that if you, for instance, if you are an impatient individual and that you find yourself taking trades that you probably shouldn't because you've been waiting for the ones that you should and they're just not showing up. You've changed time frames to give yourself more alternatives, and still it's not happening. If you're that kind of person that tends to do the wrong thing based on impatience, then you have to adjust your trading plan to fit that. For instance, maybe go down to a 2-minute. I'm talking to day traders now 2-minute or 5-minute, as opposed to something longer term, so that you get more signals, more action. So this is going to be a time of testing your ability to stay cool. And so you may want to ask me questions in that respect, as well as the trading plan, the loading gun trading plan that has what we call nuances that I've created that help you to match who you are with slight changes in the trading plan so that you can stick to it. Most people have a pretty good trading plan, they just can't stick to it. So these nuances are something that I invented several years back, and they help to match the trading plan to you, while you try to match yourself also to the conditions and to trade right. So fix your brain, and then fix the trading plan so that you don't have to fix your brain, if you catch my drift. So admin at thedisciplinedtrader.com. So I'm really glad you showed up, Michael. I was getting short on material.
So, thank you, Norm.
All right, Michael, how about yourself? How do people get a hold of you? What are you going to do for them when they do?
David's got the two websites, and then my email address is michael@mjf1partners.com. Stay tuned. I am in the process of restructuring MJF1 Partners, and I am totally restructuring everything that I'm going to be offering. So there's going to be lots of announcements, plus some new promos that I'm hoping people be interested, but they're not ready just yet. And I'd be looking probably at the beginning of November.
Beautiful.
Okay, great. And as far as Option Professor is concerned, you guys that are trading options, you need two things really. One is more education, more knowledge. And we have an options master class that we send out for free, 6-hour course, three sessions. And you also need ideas. And every week we share ideas for you on strangles and a few different other ideas. So if you'd like to get the weekly update, you go to whatever it says there on the screen, and you can get started. And it's a month-to-month deal. So, you try it for a month. If it's not your cup of tea, you can unsubscribe. And the ideas we've been coming out with, we're very, very, very happy with. So we do appreciate the support and the subscribers that we've been able to accumulate. We do thank that. But again, education and ideas, it's a one-stop shop when you go to get the options alert service. So check it out, guys. And thank you, Norm, and thank you, Michael. And we will do this again, of course, because that's what we do. And we'll see how these markets do in the weeks ahead. David,
thanks for having me.
Yeah, you bet. And David, thank you very much, and we'll send it back to you.
All right, thanks, guys. Great discussion. So just a quick reminder for everyone, be sure to subscribe to Timing Research on YouTube and your favorite podcast app. Or you can also just go to TimingResearch.com to get access to this recording as soon as I can get it posted, as well as all the past shows and presentations. Over 10 years of history of hosting events on Timing Research are all available for you to review at any time. So also, if you want to learn more about the seasonal tool that I showed at the beginning of the show, you can go to TimingResearch.com/Seasonax, and SEASONAX, and learn more about that there. And I just want to thank my guests again for today, Norman Hallett of thedisciplinedtrader.com and theirmoneyyourprofit.com, as well as Michael Filighera of logicalsignals.com and tradershelpingtraders.com, and the Option Professor of optionprofessor.com. Thanks, everyone.
Thank you.
Thanks, David.